All right, I think we can go ahead and get started. We'll admit anyone else who joins us um, as we go. But good morning, and thank you all for joining us today. Please mute your microphones if you haven't already done so. I have Dr. Larry Kessler here with us today. He's the lead author of the Boyd Center's 2026 Economic Report to the Governor. He'll share some highlights from this year's forecast, and then we'll have a Q&A session following his remarks. I've dropped a link in the chat for some media elements that accompany the report, and I will turn things over to Dr. Kessler now.
Awesome. Thanks, Aaron, and thank you all for being here today. So my name is Larry Kessler with the Boyd Center for Business and Economic Research, and today I'm pleased to release our annual economic report to the governor. So this report, it provides both a short-term outlook looking 10 quarters ahead for the state economy, as well as more long-term forecast looking 10 years out. So today I'll provide some quick remarks, hit some of the highlights of the report, then I'd be happy to take any questions about the forecast or the overall economy. So the Tennessee economy, it continued to expand over this year, but economic growth was just much more volatile as businesses and households adapted to changes in federal policy, most notably on the international trade front and the implementation of tariffs. So in Tennessee, inflation-adjusted gross domestic product, or real GDP, which measures the value of goods and services produced domestically, it grew by only 0.3% in the first quarter of this year, but then accelerated to 3.1% in the second quarter. And this was largely driven by tariff-induced changes in spending patterns as businesses and households, they front-loaded their purchases of imports, buying more foreign goods in the first quarter to get ahead of tariff-driven price increases. And then this pattern reversed itself in the second quarter as import spending plummeted and domestic purchases rose, leading to a rebound in GDP growth. So looking ahead, the short-term forecast calls for slower but still positive economic growth in the near term. So we're projecting that real GDP will increase by 1.7% this year for 2025, and then a slightly faster 2% in 2026. However, both of these would represent slowdowns compared to the 2.7% rate of growth we saw in 2024, and in 2023 it was above 3%. And slower projected growth is driven by three main factors. First, as the current growth cycle continues to mature, economic growth, it just typically settles into a slower growth trajectory. Second, federal policies continue to evolve and remain unpredictable, most notably surrounding international trade and immigration, both of which on their own could depress economic activity by increasing prices and reducing the size of the labor force. And then finally, unpredictable federal policies can lead to economic uncertainty, which by itself can reduce economic growth if businesses delay large purchases or hirings, or if consumers reconsider major purchases. So despite all of these headwinds, consumer spending in both the state and the nation remains surprisingly strong, though one caveat is that much of the growth has been driven by higher income households in recent years. And then in addition, the Federal Reserve recently cut interest rates again, which could further stimulate the economic growth by stimulating business investment if they can take out loans for lower interest rates, and could stimulate consumer spending as well. And these are kind of the main reasons for our projections of slow, but importantly still positive growth over the near term. So that being said, affordability is still a major issue for many households. And while the inflation rate, it's come down a ton since the post-pandemic highs, it seems to be stuck at around 3%, which is still above the Fed's target of 2%. And higher prices from tariffs are likely still working their way through the economy. Then, similar to the GDP forecast, non-farm employment growth is projected to remain positive, but relatively subdued. We're advancing by about 0.7% this year, and then 0.9% next year. And that equates to around 24,000 new jobs added for 2025 in Tennessee, and then an additional 31,000 jobs in 2026, both of which are well below the state average of around 60,000 new jobs per year. And then as job growth slows, we're projecting that the state unemployment rate is going to trend higher. It currently sits at 3.6%, which is still relatively low from a historical perspective. And we're projecting that it'll increase to an annual average of 3.8% in 2026, and then 3.9% in 2027, but would remain well below the national rate, which is expected to hit 4.5% in both 2026 and 2027. And then finally, the last chapter of the report is on something topical every year, and this year is about nuclear energy in Tennessee. So there's been a resurgence in interest for nuclear energy in recent years due to both rising power usage, partially driven by AI and data centers, as well as a shift towards cleaner energy, all of which make nuclear a great candidate energy source. So this chapter discusses some of the advantages of nuclear energy, such as its efficiency, reliability, and extremely low emissions compared to other energy sources, but also the challenges with nuclear energy, including very high initial costs, a long construction timeline, and an uncertain fuel supply chain, to name a few. So the chapter, it also discusses how much of the nuclear energy facilities in the country, they were built in the 1970s and 80s, with only 3 new reactors coming online during this century. One was the Watts Bar facility here in Tennessee, and then 2 new reactors recently came online in Georgia. However, some major projects have been announced just in the last year and a half, including 2 new nuclear reactors, Hermes 1 and Hermes 2, as well as a $400 million federal grant to help build the nation's first small modular reactor here in Tennessee, and which, as the name suggests, these are much smaller in scale and can be manufactured off-site for modular assembly. So the chapter, which was written by my colleague Ed Taylor, provides much more information than I could do it justice, and I encourage everyone to read it. So with that spiel out of the way, I'd be happy to take any questions about the forecast or the economy.
Yeah, I had one. You were talking about how, the federal trade policies have had an effect on just projections for economic growth. And you mentioned immigration. Can you expand on how that's having an effect on the economy?
Yeah, so the main channel that I see it through is labor supply, that if there's more people being deported and fewer people, international people moving into the country, there's just going to be fewer people working, fewer people spending money here in Tennessee or in the US, both of which could be a drag on economic growth.
Right, Jack Ziskin, Channel 6. Is there a reason why we're not seeing American citizens who may be unemployed take those jobs?
Yeah, I think it's probably, I mean, some of it just takes time to have to match employees with employers. Some of it's also preferences in terms of what jobs people want. So I think in any event, there's always kind of this transition where unemployment is going to stay higher and job match takes a while.
How are we comparing to other states?
So I think we are comparable, especially with other states around the South, of just kind of slower but still positive growth. And I think we are, again, also comparable with the US as a whole. I think kind of what we're seeing nationwide is still slower growth, but we're staying positive. So there's no projection for contraction at the moment, at least in the baseline forecast, or a recession. It's just going to be kind of slower positive growth going forward.
If you
Yeah,
don't
you
mind,
say,
I'm sorry.
oh, you're good. You mentioned, and I think David was going to get to this, the slower growth, and obviously, negative economic growth is pretty uncommon unless we're heading into a recession. What would we want these growth rates to be at? And even if our GDP is increasing, are wages keeping up?
Yeah, so I think typically, we're hoping for like 2.5, 3% growth. That's kind of what we were seeing before the pandemic, though. At least like between the period after the Great Recession and the pandemic, it was a really long expansion period. And as like those expansion periods get longer and longer, growth starts to slow. So towards the end of that cycle, we were seeing closer to 2% growth. So even that is relatively healthy. I think it gets worrisome when you get to like sub 1 or even 1.5% growth, because then any kind of stumble or negative shock can lead to negative growth and could potentially lead to a recession.
What does
How
this mean
close?
for go ahead. What does this mean for the everyday Tennessean? What would you tell them about this report that they can expect in their pocketbooks?
Yeah, I think it's tough. I mean, one part of chapter 2 we talk about is looking at consumption spending across different income groups. And as I briefly mentioned in my remarks, that a lot of the spending growth has been driven by higher income households, whereas consumption spending by like middle income households and lower income households, it's like just kind of keeping pace with where it was prior to the pandemic. And I think everyday Tennesseans are kind of seeing that or feeling that when whether it's they go to the grocery store, pay their electric bill, that affordability is becoming a major issue. So I think that's kind of the main headline for the everyday person who would read this.
Mr. Kessler, I don't mean to be alarmist when I ask this question, but what risk are we at of seeing a recession in the next year, 2 years? Because as we all know, economic downturns do happen. None of us want it to happen, and I don't want to put words in your mouth, but what's the risk on that front?
Yeah. So I don't have a number that I would be comfortable to throw out there in terms of like what's the probability, but I would say so like this is what I kind of discussed today. That's more of like our baseline case. And things could absolutely change. We could see stronger growth or slower growth. I think a lot of it's going to be driven by federal policy, especially international trade. So if we see kind of like tensions start to kind of simmer down and tariffs are either rescinded or trade agreements are put in place, I think we could see stronger growth. But on the flip side, if things get even more aggressive, if new tariffs are put in place, I think that could stunt economic growth even further. So I think that's kind of the biggest risk to the forecast, either for stronger growth or weaker growth going forward.
What has been the impact of the increase in population growth from in-migration on uh, uh, GDP in general, but primarily consumer spending and the job market?
Yeah, that's a great question. So I think that's been one of the state's kind of main drivers for economic growth. We've had kind of three years in a row of just really strong population growth, pretty much all driven by more people moving into the state. So that leads to more consumer spending, which then could lead to more job opportunities and job openings. And then there's a greater supply of labor as well. So all of which have put upward pressure on both consumption spending and economic growth as a whole. On the flip side, there have certainly been a number of growing pains that we've seen, whether it's more traffic as well as higher house prices, both in the cities and then surrounding areas as well. So that has been kind of the main challenges, in addition to kind of the upside of higher GDP growth.
What does that mean for your born and raised East Tennesseans?
It's certainly been challenging, especially with housing prices getting so high over the last 3 or 4 years and wage growth just not keeping up. So, and I think that's when people think of the American dream, they generally think of having a job or two jobs if you're a two-family household and owning a house. And that is becoming more and more difficult, especially for born and raised Tennesseans who are getting priced out of the market.
I had a question about the nuclear section of the report. How does Tennessee compare to other states? I mean, I know that we're obviously we have the small modular reactor the TVA is working on, but like how key are we to that industry?
Yeah, very much so. So this is not my area of expertise, but I believe that Tennessee, in terms of the amount of nuclear energy we use, we're like double most other states in the country. So I think it's a very key sector. And then we obviously have the Oak Ridge National Lab and just a number of nuclear energy related companies that are here because of the national lab.
Will that growth be able to offset the loss of maybe manufacturing jobs?
It'll probably help a little bit. So right now, we're not seeing a huge loss in manufacturing jobs. It's kind of staying steady, maybe a very small contraction so far. Um, and whereas so manufacturing in the States actually relatively strong compared to in the nation as a whole. We are seeing a contraction in jobs as manufacturing companies continue to kind of shift to automation and so forth. But in Tennessee, we're still seeing kind of holding steady. We're above pre-pandemic levels in terms of manufacturing jobs, but I think it's kind of stabilizing.
Well, this report is designed to help lawmakers and uh, decision makers in Nashville make economic decisions. What, uh, uh, besides obviously spending, because sales taxes drive a lot of or support the state's budget. What about uh, uh, the other parts of it, the other economic activities that drive state revenues, how are they looking now?
Yeah,
If that makes sense. I'm not sure that makes
I
sense.
think so. Let me see if I'm going to try to answer what I think you asked, and then if I didn't, just let me know.
Yeah.
Um, so I would say like we track state tax revenues pretty closely, and right now the main two are corporate income tax or franchise and excise tax, and sales and use tax. And sales tax remains just really strong. This about 4 or 5% growth we're seeing this year, so really comparable to kind of what we've seen in the past prior to the pandemic and all the volatility that we saw after the pandemic. So then that is kind of the main area, one of the main areas of strength in the economy that's giving us some confidence to forecast kind of positive growth going forward. It's just that consumer spending remains strong. Now, some of that is 100% inflation driven. Because when we look at tax revenues, we're not accounting for inflation. We're looking at nominal dollars coming in, and inflation still around 3%. So some of it is without a doubt inflationary driven, but even if you factor out inflation, the number of goods being bought is still rising over the last couple of years.
You mentioned the impact of tariffs. Should we be looking out for anything in regards to the new AI rules that could be coming down?
Yeah, so AI is a tricky one. I think just in general, like it's hard to know what the economy is going to look like with kind of how AI is going to develop going forward. So I think companies have just spent so much money on AI infrastructure over the last few years, and that's certainly been helping to prop up economic growth. And based on that alone, I definitely see AI deployment continuing to grow. However, it is still kind of unclear to me what that looks like, as AI seems to be pretty good at some tasks, but pretty bad at others, and AI acceptance and trust isn't really widespread. So despite that, like I think it's going to continue to be deployed in some fashion, as there's just been too much money invested into it. But I don't know if it's going to be like taking over jobs. It might be, but I kind of view it more as being used for some employees rather than taking over jobs going forward. That being said, I don't know what it looks like if there's rules put in place that says states can't kind of decide on their own how AI can be deployed.
Have you seen any evidence yet of the tariffs having an impact on uh, business investment in their own um, in manufacturing, for example, new equipment, new facilities, and that sort of thing? Have the tariffs had an impact there yet? And if not, what are you looking out for?
So the answer is yes, but also kind of wait and see. So right now we only have like the 2 quarters of government data for real GDP. And so what we saw was though that investment kind of surged. Of course, the trains driving by as I'm talking, but investment spending surged in the first quarter as they were trying to get ahead of those tariff-induced price increases. And then it fell dramatically in the second quarter. So I think going forward, it'll be interesting to see kind of now that we've gotten past those 2 quarters of like behavioral changes, like on the onset, it'll be interesting to see what happens going forward. That being said, we do have a section in chapter 2 that looks at kind of trade flows into and out of Tennessee and looking at their major trading partners. And two areas where we've seen some pretty dramatic effects are first, exports to China, especially agricultural exports. They've fallen to near zero, both for the US and for Tennessee. So that's really hurting our farmers really hard. And then exports of transportation equipment to Canada has fallen a ton as well. And if that persists, that can have a pretty big negative impact on our motor vehicle manufacturing industry in Tennessee.
Quick follow-up on farmers because there's also been the conversation of Argentine beef. What impact will that have if we start importing more of that on our farmers?
You would hope it would lead to lower prices. Yeah, right now I think beef prices are high, both because of trade with Brazil and also just the steer population in the United States is lower due to droughts and things like that. So getting more beef into the country, you would think would lower prices.
And just one last follow-up. Thank you so much again, Mr. Kessler. and I hate to ask about federal policy because that's not what we're here to talk about, but we're obviously seeing a lot of changes in healthcare, and that's a big part of our job market. With the ACA subsidy set to currently expire, is that going to have any impact on our forecast for next year? And if so, what would that look like?
Yeah, it could. I think as of right this second, so we didn't factor that too much into the current forecast as it was kind of being played out in real time. But I think the biggest impact that it's going to have initially is through consumer spending. It might reduce consumer spending if households have to spend more money on health insurance. That being said, some households might decide to forego health insurance, in which case they would have a little bit more money that they could spend in the near term. But then if they have a health issue, they're going to have a lot less money to spend in the long term.
All right. I think if we don't have any other questions, we can go ahead and wrap this up. Thank you all for joining us. Appreciate you
Yeah, thank you,
hopping on.
everyone.
Thank you
Thank
so
you.
much, Aaron. Thank you, Mr. Kessler.
Thanks,
Thank
Aaron.
you.
Thanks, Dr. Kessler.